Hello, 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 hello. What's going on, everybody? Welcome now, Stock Trades. All right, ladies and gentlemen, happy Sunday. We're going to go ahead and do a quick live here. There's a lot of information that we're going to be talking about. As you can see, these are all the tabs we have to get through. Hence why it took me some time to, set up the video here. So let's see what's going on. How you doing, Becky Zito? Love you, Al. Love you too, KL. Seems like a nice night for some data-driven analysis, heavy beats, and hope of being rich in 2025. Don't roast me, Al. Oh no, here it comes. Jay Crazy in the house, late night, writing a paper, waiting for the beat to hit. What's going on, Sean Taylor? Wake up, B-Rad Cooley. I guess he's not here. It's too late. It's too late for him. I made it to the live event. Let's go. It's like Christmas 6 days, straight of videos. If you build it, they will come. Clove of the dreams. Let's go. What's going on? $8. Nice, slow, steady. Terminal was buzzing today. Oh, yeah. Woo. Yeah, we talked a lot today in the terminal. And a lot of the stuff we're going to be talking about here as well. So here's the thing, right? In this video, we're going to be talking about a lot. I mean, you could see these are all the tabs, right? So we got to get to it, right? So before we even get to that, actually, we need to go ahead and talk about the future, okay? So we all are wondering what to expect for the year 2025, right? So I'm going to read this to you, and this is the most important piece right now because it's just, it's Wednesday is the day, right? So there's a thing called the first 5 day rule for trading, right? Don't shoot me. I didn't create the rule. This is a Wall Street rule, and there's statistical significance to it. So many Wall Street professionals pay close attention to the stock market's performance during the first 5 trading days of January as a potential indicator for how the rest of the market unfolds. I mean, it literally has like a high statistical power. I think 7 out of the 10 trading events that's happened, it's been positive. If it's positive end on the first 5. So by Wednesday, I believe the stock market S&P needs to be over $5,120, something around that. It needs to be around that, right? And let's open up the S&P. Yeah, so that's not bad, right? So so it needs to be at that level. It needs to be positive, okay? Because if you look at the S&P 500, it needs to end on a positive note. And certainly we're at that level, but it needs to be, we cannot go lower because if the first 5 trading days are lower, it's going to spook out a lot of, hedge funds. And I mean, it's almost like a signal to them, right? So this is what we should keep in mind. So the market has seen a downtrend recently, approximately 8 out of the 12 trading days, especially when we closed off in December. This is largely due to the concerns of the Federal Reserve. Now, I think this has caused folks to be bearish in the market in December, and it's almost like a recency bias. For folks that don't know, we can open up another tab because we need more tabs. Define recency bias. So recency bias is, I guess we can just Wikipedia it, is a cognitive bias that favors recent events over historical ones. A memory bias, so essentially it gives greater importance to the most recent events. And it's unfortunate. It plagues doctors, it plagues lawyers, it plagues investors, but it's important to understand that these are biases, right? So going back to the Federal Reserve, their role is stable prices and maximum employment, right? So the current labor market isn't driving inflation. It's shelter cost and auto insurance premiums that has contributed to the rise of the core CPI, okay? So a lot of folks were very scared the first 6 months of 2024, saying that inflation is ticking back up. And I was beating the drum saying that it was just shelter costs and auto insurance. And I don't think the Federal Reserve is going to hike interest rates because of those things. Okay. And I still feel the same thing as well. Okay. We'll talk about that up in the next document, right? So what to expect in 2025? So some analysts question whether we'll see another inflation spike like in 2021 and 2022. But the thing is, this has largely been due to supply chain issues. Okay. So based off of the current data, this I don't think is, I think it's highly unlikely. Because if you look at the used car from the Manheim Index, it's already starting to decline. And I believe that this year, from the Federal Reserve hawkish stance in December, I think any ounce of dovishness would reset the caliber for these types of investors that trade on macro, and it'll completely basically change the overall sentiment. Now, political considerations for inflation is that the presidential impact of what's going on so Donald Trump, a lot of folks are saying that President-elect Donald Trump could drive inflation higher. However, he knows that inflation remains a top concern for voters, and he's going to want to avoid policies that worsen these issues, because that's why he got elected, partially in due because of this inflation issue, right? And we know that in 2 years there's going to be election, and one of the political parties, I think it's the House, they have a really close margin, so they really can't afford to lose any members. So the biggest thing, though, is the first week of January. So I'm going to be watching January 8th. I believe on the 9th, the market will be closed in respects to honor Jimmy Carter. But what I wanted to also talk about is where we are as Clover investors. Right? So during the chat, I talked, so I've been analyzing our chat within our group, and I'm going to be taking this data and I'm going to be analyzing it and doing some statistical analysis and software to actually mathematically calculate the history of, because I do believe we did get anger. We went through all of these stages, and I think we did get anger. We got depression, and some people bounced off above and below that. Some people are at the optimism stage, some people at the disbelief stage, and some people at the hope stage. The question is now, amongst Clover Health investors, where are they on the graph? I don't think we're at complacency or anxiety or denial, because I'm looking at the simple moving average. Okay. I think personally, we're at the disbelief stage. Disbelief and hope interchangeably, maybe a little bit of optimism. I think a lot of folks are cautiously optimistic, but really, I would say what I'm sensing is a scarcity that potentially we may drive down lower. Now, if we go ahead and go to Clove and just go to the big the big elephant in the room, a lot of investors, and we can, I guess, draw a line here. Let's draw a line, and let's make this a big fat red line right there. I'm just going to draw it small. I'm just going to draw this small. In fact, actually, we'll make it long. Make it long. We'll go it here, and then we'll put it here. We want to make sure its angle is 0. We'll turn it red because it's important, and we'll make it thick. So this line here, a lot of people are looking at it. Please don't confuse this with the 200-day. The 200-day is rising dramatically, because as the price has been elevated since 60 cents. So it's rising fast, right? Folks should understand how simple moving averages are calculated, right? So a lot of people are thinking that Clover might hit 250 before it goes ahead and bounces back. And they're hoping potentially for an opportunity to buy at these levels. Okay. So the issue here is, let me explain. I'm not going to name any names. You know what? Screw it. I am. Whatever. Okay. I'm going to do it. Right? Shoot me if you do. Okay. Michelle's cousin. I'm going to do it. Michelle's cousin. I've been banging the table about Clover Health, right? I've been banging the table about this damn company for a long time. And I literally is like pulling my hair out, right? And unfortunately, I'm upset. It's like, are you serious? But it's okay. He was trading Clover from 80 cents to like, whenever it got to like, let's look up. Yeah, this is way better. Trading it from, was it when he started? From like here, 90 cents to $1. That's like a 36% gain. Then waiting for it, accumulating at 78 cents, buying it here, getting another 30% gain. Right? Going here, buying it at 83 cents again, and then making another, this one's a nice one, making a, 80% gain. In fact, this is when Clover hit 150. So a lot of people were like, that is the max that it could go to, right? And this is where he got trapped. And this is where a lot of people got screwed up in Clover, right? All of a sudden, it started dropping down back to 60 cents. So definitely bought more, right? And then all of a sudden, it rose up, let's say, back to $1.50, $1.50, and then they were thinking that this thing is going to drop after $1.50 because they think that patterns have to repeat themselves, right? So then they go in and they, let me see, when's $1, right? So July 19, they went in, they got there 150%, 100%, 150%, and then a lot of them sold, right? So Michelle's cousin actually sold at 120, 130, right? And it's unfortunate because he said, I'm going to wait until it goes down. The problem is it did not go down. It did not. It ended up going up all the way another 104%, right? In fact, now let's zoom in now. They thought, selling here would be a good thing. Maybe around here, this little W, remember the W turd? Remember that W we got? We got another W here. This kind of looks like a W, right? And all of a sudden it went ahead and it exploded upwards to a point where it exploded up to 165. So then it went up to here and then it fell. And then now 250, it fell down to 250. So it's like, okay, let me buy, let me reaccumulate. The problem is the people that sold here, they lost out on 49.70% gain. Okay. The problem is getting shares here and buying them here versus here. That's a big mathematical difference. Okay. And, people can, Ken can explain this difference as he sold around, I think 140 or something. So it's, they can understand the mathematical equivalence of this. The point is, when you're in the disbelief stage, a lot of people are trying to secure gains, okay? And I don't blame them, right? They are scared that this thing, we don't need to talk about people who sold early. Okay, no, I get it. It's okay. I'm only explaining this because my, I guess, future cousin-in-law did the same thing, but he didn't buy back in. He didn't. The stock price went too high. It's like, why? Right? Because it's a disbelief stage. It is a disbelief stage. So a lot of people say we look forward, not backwards. I actually disagree. Steve Jobs says, you can't connect the dots looking forward. You can only connect them looking backwards, right? So I disagree with that, right? And that's the whole point. Hard truths, right? Right? And I'm not trying to put you under the bus. Sorry, Ken, right? But you become a brand for our channel. I love you, Ken, right? In fact, I'm going to dedicate a t-shirt for you specifically. Or I love you, Ken. Okay? Of missing out. So have a lot of other investors. Yeah, exactly. But I'm still up 100. Well, exactly. 100%. No, you got back in. I get you. The point is, a lot of people are like, okay, this thing went to $1.60 and I'm going to sell it and it's going to go back down to $1. The reason why people thought that was because it went up here. It went up to $1.60. Literally went up to $1 It went up to $1.63. It literally went up to $1.63. And they thought that this thing's going to go back down at least to $1.80. They literally thought that, okay, Clover went up to $1.60. I'm going to go ahead and sell it because it's going to fall back down again and I can redo my trade. They did that and they got their asses handed to them. They got their asses handed to them and they lost money. Okay. They left a lot of money on the table. Okay. And a lot of the arguments was potentially macro, et cetera, et cetera. Again, right? So 250 was the base price potentially, and when someone got in. Ken, didn't you get in around that 240, 250? Didn't it go down pretty heavily, and then you got in, right? And I think Vivek did another insider buy, right? And then we got that explosion because of the CMS 4-star rating leak, right? Not leak, intern forgot to secure the browser. Yeah, 244. Again, you're not Ken, you're not the only one, right? You're not the only one who did this. This is not a you are one of many. You are one of many. I used to be like you 14 years ago, right? Again, the whole point of this is, just like what Steve Jobs says, we want to look at the past so we can learn. Okay. So I think what a lot of people are thinking is they're thinking that Clover's going to go back down to, let's say, 278, 280, or 250. Right. And they're going to be like, I am waiting for Clover to go to 280 and 250. And then I'm going to buy. I'm going to wait for it to go to 280 and 250, and I'm going to go in $2.80 and $2.50 to be specific, and then I'm going to go ahead and buy, right? And the issue is, I believe that you are in the disbelief stage. This rally will fail. This rally will fail like the others. This is good because I'm also starting to see this phase within our stock terminal, having access to over 2.5 billion outputs of institutionally graded data. And I'm seeing this. Imagine outside of the stock terminal. This is, I think, again, I haven't done the data. I cannot statistically prove this yet. I'm going to have to do the analysis, which I'm sorry I haven't done yet, but I think we're here. I could be wrong, right? But I think we're in the disbelief stage. And Peter, Peter Turd, picked up on it. And I believe we are here. I truly believe we are here, which is good. It means we're very early in the rally. Okay. And I, again, could be wrong, could go to 250, then bounce back up. But the problem is just like how many thought that this was going to go from 167 down back to $1, they never got that opportunity. So now they had to buy. The least amount was 250, 244. Like, because Ken, actually 246, checked my transaction history, and I DCA'd up since then. Ken, answer the question, okay? If this thing fell back down to $1.50, let's say if this went all the way down to $1.50, would you have bought more? Of course you would have. But you have not had an opportunity to buy since this thing has exploded, okay? So that's what I'm trying to I think, right? I think Clover investors right now are a mix of three batches: disbelief, hope, and optimism. Okay. Of course I would have. I've been doing that for 2 years. Exactly. Didn't you think, Ken, when you sold at 144, and I'm not making fun of you here. This is for our learning, right? When you sold at 150, 144, whatever you sold at, right? Did you think, because it got to like 150, 160, did you think that it was going to go back down just like when it went up to 160 on August 4th, 2023, 2 years ago? You thought it was going to go back down, right? So I was buying at 66 cents, right? So again, Ken, right? You pretty much basically thought that it was going to go back down back to $1, right? So, I mean, you're just trying to rinse and repeat. I don't blame you. I mean, it's been doing it for how long? Yeah. I thought the explosion was going to happen late 2025. Exactly, right? So you thought it was going to go up and down, up and down, up and down. I get that. I get that. Okay. Also, how many bought the 987 range and thought it won't drop anymore? It works both ways. So I completely get that, which is why people like to look at mean reversion wherever the hell the graph is here, right? From the mean reversion perspective, right? The stock was trading at book value at 60 cents. The stock was trading at book value. Okay. For the longest time, it's been trading at book value. And now book value is changing. Okay. So this is why it goes back down the numbers. So if you were to go here and go open up help, go to stock fundamentals, go to next, go to CFQ data, and look at the quarterly data for Clover. Open it up here, download it, open it up, make it its own thing. Go to the balance sheet, make this bigger, and look at, zoom in. And then remember, this is 2020. In fact, let's just pull the dates. Let's pull the dates. Let's go here. Let's go to total stockholders equity. And let's go here. Okay. And let's turn this all into dollar bills so we can see what the hell's going on here. Okay. So for far too long, let's start here, 2023, right? Let's start here. This is a great starting point, right? It used to be 347, 391, 422. From 2023, stockholders' equity has been going down. Look at the date. So from June to September, it went from 330 to 331. From September to December of 2023, it went from 321 to 286. From December of Q4 of 2023 to March of Q1 of 2024, it went up. It went up. It went up. And guess what? Now it's going higher. So stockholders' equity, the equity of that of the investors, is actually going higher. So when you're talking about when the stock was around $9, I mean, let's figure out kind of when. Let's go back here. Let's go here, and let's figure out when was the stock $987 range, because we have the data here, right? So here's the $987. This was July 2021. Okay. So let's go to July 2021. And here it is. Here's July 2021. It was 314, 412, 535, 489. And the reason why it went up was because of a share dilution. Remember how it went up a couple of million, right? Because of that share offering, right? So you'd have to subtract that, right? Because look at March and here. That's why they did the share offering. Then all of a sudden it went from 539, 489, 426, 391. It started going down. You mean dilution? Yeah. Well, that's what I said before it split. Okay, I don't know. I think you're talking to. So the point is, Sean, is it got to a point where the stock was trading at book value, which was 60 cents, and you calculate book value from stockholders' equity, right? And the book value started rebounding, okay? That's what happened to the book value. It started going up. We're going back to that analysis with the fair value, which we talked about here, right? Let's go here. So the book value started going up. So of course the stock went up. So a lot of people that unfortunately sold at the 160, they were just looking at technical analysis without fundamental analysis, and they thought that it was going to go back down. I get it. They thought it was a pattern to repeat itself, but the fundamentals are changing. And I think that the people think that this is going to fall back down now. They're not looking at the fundamentals regarding the free cash flow and what's happening. So let me open up my terminal here. Let's open up here. Let's open up the help menu right there. Let's do the stock fundamental analysis. And let's look at the quarterly ratios for Clover. And let's look at 20 amount. Let's look at 20 amount, right? 20 amount. Okay. And let's go all the way to the top, right? So, and let's just talk about this year, right? Because a lot has happened. Like when I say this year, I'm talking about 2024, right? Okay. All right. So in 2024 March, the price of the fair value of the stock was $1.27. It's been going down ever since. $1.60, right? $1.61. It was going down because of they were not operation. That's why Scott came in. He took a distressed balance sheet and he turned it into something good. And then they removed ACO to put in the profitable side of the business. So they got the 127, right? And then all of a sudden it went to 180. So in June 30th, the fair value was 180. But if you look at June 30th, it was trading at 99 cents. Oh, no, wait, nope, sorry. June 30th, it was trading at $1.23. But the fair value is $1.80. Okay, fast forward to September 30th. It went up to $4 price value, right? So, and now it's currently trading at $3.30. So the point is yes, things can happen between the $9 and $8 and $7 range. But you can't just look at the technicals. You're just looking at technicals. You have to look at the fundamentals. The fundamentals showed that this is actually different. We're actually increasing stockholders' equity, and this company is not going to go bankrupt to a point where even the most bearish Ari, if I can find him, the most bearish guy, Ari, where is he? Even stated, even Ari, the bearish guy on Clover, said, this is an impressive business turnaround for Clover, right? So the question is what is the ultimate goal? Like, what's the ultimate strategy that has won time after time, especially in a company that is successful? And it goes back down to this analysis, I think, that Schwab did, comparing people that stay in cash, bad timing, dollar cost averaging, perfect time, or investing immediately. You can see the returns, right? So there it is there. Fundamentals, I agree. But what I was saying is psychology works both ways. You bought in $7, $8 and bought below that, correct? Absolutely. So I went ahead and bought at $7, $8, and I only did 10% of my portfolio because it was a speculative investment. And then once it started going below that intrinsic value and it got to book value, I put the hammer kitchen sink in it. And then what I did is, and you can look at my returns, I posted them on Reddit, right? And then you can go ahead and take and what I did is then this year I did covered calls, and then I went ahead and I did a first in, first out method. So I recycled all those shares, $7, $8, and I took those as a loss to offset my gain for the option wheel strategy that I made. So all the money I made this year, I technically am at a zero level balance. There it is, right? So there it is there, right? So a lot of people sold, like Ken sold around 150. My cousin sold, I think, around 120. A lot of people sold 160. They sold at that one. A lot of people sold at that $1.63. They sold, and because they thought it was going to go down, but then they missed out on this huge gain. Okay. So that explains kind of where the disbelief is and where that is. Okay. Now let's go to the pro and cons list for Clover Health. So we talked today about inside the group. Okay. And we talked about how we need to create a pro and cons list, right? So I went ahead and started with the cons. Okay. And I'm going to go ahead and look at those. And we're going to do the pros. And then I went ahead and did a risk analysis probability measurement to see kind of where we're at in terms of, should we be more bullish or bearish, right? So we could go ahead and kind of read it, and I think it's important to read this one, right? So cons, okay, right? Interest rate risk. If the neutral rate remains high, forcing the Fed to raise interest rates, this could negatively impact the stock price, right? So we said that earlier today. Geographic growth risk. What happens if Clover fails to grow outside of New Jersey? It could limit expansion and revenue potential, right? If they can't grow outside of New Jersey, then there's no growth, right? Outside of New Jersey. Competitor risk. What happens if a competitor develops a better AI model, right? And what happens if like United Healthcare does it, right? They've tried to develop one before, but it failed. But what happens if they make one, you know? It could beat Clover, right? What happens if the Clover assistant fails to reduce medical cost ratio in the Iowa clinic? It could damage their value proposition. Even though Peter said they're not starting from zero there, but what happens if they fail, right? What happens if there's a cybersecurity attack for Clover that just like United Healthcare and it damaged Clover's reputation? What happens if there's regulatory risks with political backlash that concerns the software developers in Hong Kong, right? What happens if there's cash burn risk? And I think Trump said that they like H-1B visas. So, I mean, but still, could happen. Cash burn. What happened if SG&A expenses rise and they burn through all their cash? Clover may need to issue more shares, and they may even have to do a reverse stock split. Who knows, right? Operational risk. What happens if Clover, fails to prove that it can care with patients effectively? Institutional investors may lose confidence. Why are they not buying right now, right? Investor sentiment risk. So why are they buying right now, right? Why is it still low, right? No, I know. I definitely agree with that. The thing is, I'm about to start my ICU rotation, so my time is going to be limited now, and I'm not going to be able to respond a lot in the chat. This was sadly my last day, which is why I kind of wanted to create this pro and con list so we can update it, right? So here's the pro. Free cash flow. Clover has been free cash flow positive for the first 3 quarters of this year, with the potential of Q4 being positive. We'll see, right? HEDIS score. They have the highest, demonstrating value-based care success. Diverse leadership. They have board members from United Healthcare and Molina. They just got their 4-star rating, recently upgraded to 4 stars to improve profitability margins. They indicated that they're about to turn on the growth side of their business. Cost management. Unlike competitors, Humana, Clover is reducing its medical cost ratio, proving its AI software effectiveness within its own company. They plan to expand and replicate what's happened in New Jersey and South Carolina, and hopefully in other states. They have roughly about $2 million of insider buying, showing internal confidence in the company's future. They did a $20 million share repurchase buyback program, signaling confidence in reducing dilution risk. Positive analyst coverage. Seeking Alpha ranks Clover #1 in the industry, and Fintel places it amongst the top 75 best U.S. stocks and top 250 out of 33,000 stocks globally in the world. Intrinsic value. Based on discounted cash flow, DCF calculations, the stock appears to be undervalued. Insider sales. They have only sold to cover tax liability, not due to lack of confidence in the company. A macro tailwind. The government is likely to lower interest rates due to sustained debt payment. So So the government right now has a problem. They have a debt problem, huge debt problem. And the amount of interest that they're paying is actually greater than that of it's getting to a point where it's going to be almost as much as the military budget. It's too expensive. So they're stuck between a rock and a hard place. They're going to have to decrease interest rates. If not, then they're going to have to figure something out, right? Oh, and then analysts have a higher stock price than the current trading price in terms of their target price, right? So if you conduct a pro and con statistical analysis, you can see that 82.31% has the pros side, and these are independent analysis. That's why they don't add up to 100%. And the cons is 37.22%. So if you were to rank from a 1 to 10 scale, I'm about 7, around 7 bullish, right? Just take 1 minus this, right? And then I went ahead and was a little bit more conservative. So based off of what I see right now, and if you guys have any cons that I have not added to this list, we can add more cons, right, to this so we can conduct the analysis correctly. But overall, I think that there are more pros than there are cons, which is why I've been bullish. Okay. So and I'm not the only one who thinks this. This guy was the biggest critic of Clover. He said Clover was going to go bankrupt. And I don't think this guy had a short position. I think this guy was just honest to the people on LinkedIn to a point where he said, he was touting, I think, Bright Healthcare to a point where he said, I hope people swapped it out for Clover earlier this year, up 250% on an impressive business turnaround. So even he himself, people and critics now are like, you know what? This is a complete business turnaround, right? What's going on, Patrick? I'm trying to see here. Going through all the comments here. Okay. So then we look at competitors. I mean, like if SoFi's, Bank of America, and Chase competitor were falling, it would be all over. But for Clover, it's quiet, right? So Humana's free cash flow is negative on the trailing 12 months. Holy crap, right? It's negative. So the question now is, it's pending right now on that Q4, but based off of the TTM, it's negative. Okay. Humana's, people are noticing that its Medicare Advantage may fail without regular or regulator intervention, which threatens the core business model because it's negative. That's why it's down 40 to 50%, right? To a point where, since a key competitor is stumbling, you can look at Craig Hollum, who initiated a $6 price target. You know what he said? This is what he said. With a better star rating and a key competitor stumbling and a heightened focus on reducing medical costs, we believe Clove is positioned to see accelerating revenues, cash flow, and earnings. He also emphasized that as this relatively undiscovered company gains increased market awareness, we expect shares to continue their upward trajectory. The problem with retail investors is they sell their winners too early, right? How many people sold Palantir too early? They don't let their winners ride because they don't get a lot of them. They don't get a lot of taste of winners, right? So they sell them too early. Okay. But like going back to here, what key competitor stumbling? What competitor is he talking about? He mentions it. It's Humana. Humana is stumbling. Look at their free cash flow. Humana is stumbling, and the analysts are picking up on it. Not all of them, but some of them. Because the problem is you have to look at the quarterly results. If you look at the last TTM, trailing 12 months, if you don't know what these terminologies are, you should not be in the market, right? This is like basic terminology, which is why we had the mastering course to teach folks the terminology and the data. Because you can't play the market if you don't know the terms. It's like doing surgery without knowing the anatomy. You're going to kill someone and you're going to kill your portfolio. So the thing is, analysts now and institutional investors, they're going to start increasing their ownership of Clover once it's free cash flow positive on a fiscal year basis, and once it increases their earnings, which is what Hewitt was saying. In our stock terminal, we talked about how a lot of folks were saying, well, breadth is going down, right? Breadth is going down. I said, no, breadth is going down is actually an indicator to buy, right? In fact, we did a statistical analysis that showed that when breadth is down, it's actually a wonderful time to buy, given all the statistics we ran from 1998 to 2024. And the signal happened in 2018. I'm sorry, December 18 in 2024. You can see it here. People said that, hey, the VIX spiked to 27.62. This could basically be the start of the most bearish thing that we could ever get. This is the start of the correction. I said, well, actually, the MOVE index went the opposite way. The bond market, which is responsible for the MOVE index, said that, you know what, this is complete bullshit. But we went ahead and did a statistical analysis regarding all the times the VIX has gone like this. And we found it in 1987, 1989, 07, and 18, 21, and 2024. And we found that a week later to a month later, the stock market's up, which is what we've been seeing. It's been playing out. And if we were to look at it even deeply, we can find that the VIX was a nothing burger. Well, the VIX used to be $27.62. Now the VIX is $16.13, and it's down 10%. Right? So you could see everything is statistically backed by some form of data. Now, I could be wrong, but at least I hit it with data, right? So the question is, what key competitor is he stumbling? Well, we mentioned it. It's Humana. So just like from Blockbuster to Netflix, BlackBerry to Apple, MySpace to Facebook, Kodak to Canon, Borders to Amazon, Marriott to Airbnb, taxis to Uber to potentially robo-taxis, I think we're going to see money flow from Humana to Clover Health. We already started seeing money leaving. Okay. And if you look at the 10-year stock price projection, which is a very humble projection, the low we should see is 248 to 413, 311 to 518, and then it's going to be a slow rise. This would be the normal case. Let me go ahead and turn on the fan. It's getting pretty hot in here. Hold on. All right, so I hope you had some time to look at this graph, right? The question of the matter is, do you think now, since Palantir was able to essentially go up so high in such a little time, do you think that Wall Street now is like, shoot, these retail investors are on it? Could this, what I'm basically trying to tell you is, yes, Tesla took a long time, Enphase took a long time, Humana, United Healthcare took a very long time. The question is, do you think Clover is going to take a long time? I don't know. I don't know. I mean, if you look at Palantir, it certainly didn't take a long time, right? So that I don't have. I don't have a magic 8 ball that can do that, right? But this is what I'm expecting, and we'll see, right? But this is what United Healthcare, ELV, Cigna, CVS, Humana, Centene, they're losing. They're hemorrhaging. $326 billion has hemorrhaged from them. They're losing money. The question is, where's this money going to go into, right? If you look at Clover, it's ranked 1 in the industry, 4 out of the 1,000 stocks in the sector, 20 out of the rank of the overall United States stock market. And it's, I mean, you can't beat that, right? I mean, holy crap. And then Fintel's grading it to be top 75 and then top 250 in the stock market of the world, right? So, I mean, again, these are all data points that I'm looking at, right? These are, I'm not, this is not my opinion here, right? I didn't make this, right? If you look at the Clover Health sentiment, these are not my videos. This is articles that went from bearish to bullish, right? And you could see it's been tracking almost to the stock price, right? I mean, you could look at it here, isn't it? Doesn't that look like almost a stock price, right? See if I can find it. So many tabs, right? If you look at the people liking Andrew Toy's post, these are big companies, guys. ELV stock is liking it. Clover's liking it. CVS is liking it. Blue Cross is liking it. I mean, Andrew Toy is becoming a leader in healthcare. Since the December FOMC turnaround, the stock S&P 500 has been going down. And then smart money all of a sudden turned on and they've been buying more. And every time I want you to look at the blue line. I'm going to switch tabs. Look at that. Boom. See how it increased? Let's do it again. Right? It went up. See how it increased? They're buying more. Right? So smart money is actually being buyers of the market. Right? Institutional ownership has been going down. I mean, it looks negative, doesn't it? The question I asked myself is, what about the spike? Is this spike statistically significant? So I graphed the 5-period simple moving average, which is in the dashed line, and you can see the institutional ownership is higher above that, which means that this may be statistically significant, and it's higher by 2 points. The last time we've seen this was here, and all of a sudden it dropped. So I would like to see more points, but again, we'll see. I mean, the difference here, the stock price is going down here, the stock price is going up. So we'll see if this is statistically significant. Okay. If you look at analyst projections for gross margins, holy crap, they're in the plus 50 to plus 60 range. Why are I don't know this. I'm just reporting. Don't kill the messenger here. Why do analysts expect gross margins to be increasing? Potentially maybe because of SaaS. We zoomed in on institutional ownership, and you can see the MACD is about to get signaled. And institutional ownership is above the trend line, the exponential, and simple moving average. And if you look at the stock price, which is down here at $3.50, look at the analyst price targets. Matt Hewitt has a $6 price target. Richard Close of Canaccord Genuity has a Whit Mayo has a $4.50 price target. Richard Close of Canaccord Genuity has a $4.20 price target. And UBS has a $4 price target. Ladies and gentlemen, this is the first time where the price targets are higher than the actual stock price. I believe that we are having, just like how Ari put it, this is an impressive business turnaround. And I believe Clover Health investors are in the disbelief stage because they can't believe it. They can't believe it. And I don't blame you. I do not blame you. I get it. Right? Just like how people went ahead and they saw this thing go up to 150. First it went up to 330, and then it fell. Then it went up to, that's why people are very bearish at 330, right? It's going to fall back down again. Just like how it went to 160, then it fell. Then it went to 160. People thought it was going to fall again, but it didn't. I think this is a business turnaround. Okay. So, and if you look at, so there's the price targets there. And if you look at the mean reversion, I think we're going back to that mean reversion at $4.50. The question is this is the standard deviation movements of Clover. Clover moves really fast. It moves down and moves fast on the downside and moves fast on the upside. But I do believe this is the business turnaround. The current price is $3.29. The mean is $4.49. One standard deviation is $8.63. I think we're going to move up one standard deviation. We'll see, right? I think we're going to be in that area. And if you were to conduct a million-time Monte Carlo simulation of intrinsic value, not price action, intrinsic value, you get an average intrinsic value of around $11.69. That's around the average. But right now, Clover's trading around here, $3. And a lot of it's here, which is around the price target of Matt Hewitt, right? If we were to go ahead and do the Monte Carlo simulation, you see all these different types of lines. These are all probabilities these are all potential futures of our lives, right? And a lot of it is around under the $10 region for now, right? So, going back to Clover's ranking, it's ranked top 1 in the top managed healthcare sector based off of Seeking Alpha's model. It is ranked highly right now. Just look at it. It is ranked highly. And Humana is ranked 8. So anywho, if you have any questions, drop them in the chat. But this is kind of the progression of what I was saying. We're going to continue updating the pros and cons list. As you can see, there are more pros than there are cons, and statistically you can see that from the pro and con statistical analysis. I try to be data driven. If you've seen here, tell me at what point have I been emotional? Tell me at what tab has there been any emotional suggestion? Right? Sean was saying, Dish, right? $9 to $8 to $7 range. People thought it would, drop. It works both ways. The problem is that's why I said you have to mix fundamental. That's why in the Mastering Stock Market course, we say level 1, level 2, and level 3. Level 1 is fundamental analysis. Level 2 is technical analysis, and level 3 is options analysis, right? For level 1, fundamentally, we talked about the graph here, right? I mean, we can go ahead and graph this here. Here, let's graph this whole thing. Oh, let's go. Let's start here because it was like a SPAC. It was weird data here. Let's graph this, and this is in reverse. So we're gonna have to do data. Well, let's actually. Let me just go ahead and graph this real quick. I think if you sort like this, there it is. Oh God, it worked. Oh, hallelujah. Woo! It worked right here. Where's 2024? So let's go ahead and graph this, okay? So let's use data. Let's use what God gave us, right? Let's use data. So let's fix this here, and let's look at total stockholders equity. So Sean, you were saying, just like when the stock price was 9 to 8, 9 went from 9 to 8 to 7. When did that happen? Well, let's look. It was around $8. It was around $8 here in 2021. Mid 2021, right? Was that mid 2021? Yeah, mid 2021. So let's find it. So here's 2021, right here, right? In November of 2021. So now we have to ask a question: why? Why did it go? Let's do this. Let's go here. Let me paste this. Let's open this up. Go here. And let's open up this. Let's go here. And let's do share dilution 300 million Clover Health. There it is. So, everything's mathematically calculated. November 17, 2021, Clover Health diluted shareholders, right? And they did a share offering in the primary markets, okay? So November 17, you're going to see an uptick. So the question is, what happened? Why in December did it go up? It was because they did a share dilution. They needed to raise capital because they expected this decline, okay? Right? They expected this decline. So the question is, once Clover was around the $8 and $10 region, it was here. Why did it drop? Because the stockholders' equity is dropping. The stockholders' equity was dropping. Okay. And the goal was we needed to essentially have those MCRs in the 70 to 80 to 85%. Sadly, ACO wasn't doing it, but MA was doing it. In 2023, I said, or 2022 or in 2023, I said they need to delete ACO. I can find that message, right? A lot of folks were saying, no, they can't do that. And I'm like, no, they need to get rid of it. And luckily they did. They had to. And the price got at book value. It literally got to a point where, if you don't recall, Clover was trading at around $300 to $400 million market cap. If you don't remember, that's where Clover was, guys, right? And it got to a point where now we're starting to see it uptick. You see that uptick? We are starting to see an increase in the stockholders' equity. So the difference between so I disagree with you. It does not work both ways in this instance, because in this instance, stockholders' equity was going down. Here, the stockholders' equity is going up. And people that bought in at 60 cents at $1, and they dollar cost average, and they did it in a way where they used intrinsic value and they amplified the percentage of their dollar cost average, they are sitting sexy right now. And then for me, what I'm doing, since I'm in that boat, I am waiting now because I want to hold a winner. I don't want to sell early because anything could happen. Anything could send this stock price high, right? And you could see it's starting to almost create like a rebound. Who knows, right? We could get a news article that says Clover Health just signed a deal with you, Molina Healthcare. And all of a sudden, this stock price could go to $4 or $5, $5.50 overnight. We do not know, which is why I have the long term, and I have the wheel strategy. I'm putting, which I'm okay with, losing money to the upside. Two dangers of wheel strategy: cover calls. The price of the market price can go above the strike price of the cover call, and the problem with a cash secured put is like any other problem with holding a stock. A stock could go lower than the strike price. So you need to be comfortable at whatever strike price you're okay with. And that's kind of the understanding of it. And I think it's pretty rudimentary easy, right? But overall, I think based off of data and based off what I'm seeing, we're seeing an increase in stockholders' equity. We're seeing an increase in free cash flow. We're seeing an increase of analyst price targets. And I think the only conclusion that you can get to is this the upside is huge, right? In my opinion. Again, take it as a grain of salt. But I hope that with this data I've outlined to you, it's pretty, I hope this was clear. I hope this was clear. I mean, I think you will not find any analysis of any stock in the market that's this in depth, I would say, because I have not seen it. And if you do, please share it with me. Maybe there's one person who I like. He talks about SoFi. I like him a lot, right? But other than that, this is it, right? So that's all I have for you guys. For folks that are interested, we do have the New Year sale expiring. Take advantage, right? We will be closing it off soon and increasing prices. And I believe my videos will be limited. I'm going to go to the neuro ICU and work. So I'm going to be very busy. So my time will be limited. So it's unfortunate, but this is why I've been repeating these things in the videos, because, the fundamentals haven't changed. Okay. So in fact, they gotten better. So I had to sell half of my holdings Friday. It was taking too much of my portfolio, and in confidence, I can make some good returns and reinvest in the $3 range again. It's not going to move much anytime. Hey, Abraham, who knows? I mean, you might be right. It may not move. In fact, I hope Clover stays in the $3 range. Holy moly. The reason why I wanted to trade, honestly, guys, if it was my opinion, I wanted to trade sideways for the next 7 years, man, until I finish residency. I want this thing to trade sideways so I can do the wheel strategy, so I can keep wheeling it, right? I want it to have its burst to 3 to 80, back 380 down to 320. I want that, right? But the problem is you're implementing something called timing the market. And it's very difficult to do. And the issue here is you get stuck with elements like this, right? It's very difficult. All right, guys, if you go ahead and like this video, give us a thumbs up. I appreciate you guys. And that's all I have for you guys. Happy Sunday, and we'll see what the market does. Yeah, I mean, I the next time I'll have time is probably going to be maybe in June. It's pretty, maybe a little bit in February, but yeah, I'm not really. Yeah, it's hard to find the next CLOV. They come in once every 20 years. Thanks for everything, Al. I appreciate you, Baked Zito. That's it, guys. Yeah, have a good rest of the Sunday here, and I'll see you in the next one.